All right. Good morning, everybody. Good morning and welcome to the education room. Nice to have you guys with me today. Thank you, Ron. One day, right? Feels like forever. One day feels like a long time sometimes. Hope everybody had a great weekend. Hope John took good care of you guys yesterday. I'm a big fan when he comes in and takes over the room because I think there's that kind of next level education that typically comes with him. When you get somebody who wrote the software, you get somebody who's been using it forever. I'm married. Um, and what it does is it presents a perspective, right? Good morning, Mike. Good morning, Gary, Luciano, Shogun, Alan. He always is. Good morning, Dave. John makes you think about things, right? He makes, oh, what's that next step? What's that next level? Where do I go from this foundation? And one thing that I've always appreciated about John taking this room is he always circles back to the basics. Let's talk about the basics. Let's talk about trigger lines. Let's talk about termination conditions. Let's talk about advantages. And guys, really that's what we do here every day, repetition. And what I teach, especially the first hour of classroom, is we're building a foundation. You guys are being able to take this software, to look at it, to understand it, to take the information that it's given you in its most basic form, in its most remedial form. And from that foundation, you're going to grow. Like growth continues each and every day. And you won't even recognize it half the time. You'll put yourself and you'll be like, oh my gosh, there's a pattern. I've seen that before. Hey, here's an advantage. I remember that. I've seen that before. And it all comes from this great foundation. And we're going to talk about that in a minute. Before we do, there's two things that I do each and every morning, guys. And I'm going to give you links to both of them. And the first one is if you're on NinjaTrader 8, I go through the Ninja 8 stability instructions. Deleting temp cache, going through there, getting rid of that workspaces folder. It's all outlined for you. If you're a NinjaTrader 8 user, John has painstakingly created a process that helps minimize, if not alleviate, um, that spontaneous shutdown that you see sometimes. And all of this is precautionary, prophylactic to get you in a position for your computer to be running optimal, super fast, super clean. Everything's the way it should be. Some of you, like I was, are just on old computers, right? You're just like, man, I've had it for 5 years. I can still go to the Google webs. I'm all good. Um, if you really are interested, multiple workspaces, a lot of charts, stuff like that. These guys at Easy Trading Computers were nice enough to piece together a package for Nexgen users. It'll save you a couple $1,000s in the long run. And it is fast and it is designed to perform. And I've had nothing but great feedback on these, so I wanted to put that link in there for you. But then I think the most important thing that I do every morning after I set up my computer for success is I set myself up for success. And I like to go to forexfactory.com. Here you go. One more link for you guys. I'm going to link blast you this morning. And I'm just looking for news. I'm looking for three different things. And this impact, there are yellow boxes, which are low impact. They may move the market. They might have an effect. I want to be aware of these because what happens is I'm not trading the Empire State Manufacturing Index. I have no trades that revolve around what's said on that. But what I am doing is I'm seeing that it may have a high impact on the market, that it may make the market react erratically. And I just basically don't want to be in front of that freight train of emotion as it comes through the market. So today, Tuesday, April 18th, building permits at 8:30, housing starts. Probably didn't make much of an impact. At 1 p.m., Bowman speaks. Again, low impact, not worried about it. And in a weird twist of things, we don't really have any high impact news until Thursday. But when I see these red and orange boxes, that's my cue to go toast a bagel, refill my water, text my wife, do anything other than find myself in a position. You may choose to adopt the same thought for your plan. You may not. That's entirely up to you. But this awareness helps for sure. And then if you're brand new to this class, first and foremost, welcome. It's great to have new students in here. Guys, it's great to have you old students. Not that you're old, but you've been with me for a while. And you know that everything that I talk about comes from the education page, guys. There really are no secrets with Nexgen. And while we will present concepts, for example, John will come into the room and you'll be like, oh my gosh, I've never heard that. Well, because it's not part of the foundation that we're building. Because everybody, old in every sense, you and me both, Ed, what we're doing is we're creating through repetition, we're creating through interaction a foundation, a solid platform for you guys to grow from. And as we do it, it's going to revolve around, for the first hour of class, this is what we're going to be talking about. High probability trades, guys. High probability trend trades when every indicator on every chart agrees for the trade. Strongest triggers, nothing in the way. Picking that best entry with nothing between that entry and your profit target. That's going to be your focus for about 20 days, guys. Just getting to the point to where you can read your charts. Because 90% of what's done by any day trader, not just a Nexgen user, 90% throughout the day is just reading charts. 10% is going to be actually pulling the trigger, taking that trade when the advantages are present. And chart reading mastery really incorporates three elements, and this is my goal for each of you, is to be able to look at your charts and understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Guys, you're not going to be able to tell the future, but it's going to feel like it most days because you're going to read your indicators and get these key concepts, and using those continuation points for areas for entry, using where the market is likely to go is going to help you develop smart profit targets, and understanding where the market is likely to stop is going to keep you on a trend trade from trading into areas where the market is likely to end that trend. And what's pretty cool when you watch the software for just a little bit of time, these areas where the market is likely to stop aren't only being recognized by Nexgen users. These are the same areas that are being recognized by big, deep pockets institutional traders, the people that are going to have reactions to those areas as well. You'll be able to see them long before you ever get there. So we're going to focus on a trade with only 3 rules initially. And these 3 rules are going to provide 3 very distinct advantages. You will be able to recognize them. Most people recognize them in a couple days, and then that practice comes to where you can not only recognize them, but make decisions based on them. And your time with that high probability trend trade, everybody loves to hear this because nobody wants to take just one trade. I'm not sure why, but they don't. Your time with a high probability trend trade is going to take you to a medium probability trend trade, guys. And this is where most traders settle in and find themselves taking these trades where most indicators line up for a trade. However, a small issue exists. We're going to talk about some of those trades today. And this ultimately will be the vast majority of your trades. But when you're executing medium probability trades, you're going to take them and manage them assertively. Your chart reading is going to allow you to manage them assertively. If there's trouble in your way, you may take a portion of the position off at the trouble spot, reduce risk to a 0 loss level. If you've been following the pictures posted in class this morning, you've already seen that done quite a few times. So we're going to focus on the absolute best of the best. And from the best of the best, we're going to grow and mature into the rest with the software. Gary, snow in Chicago, I just saw that. I'm sorry for you, my friend. So without further ado, guys, let's talk about 3 rules. Keeping it simple, right? Keeping it basic. Remember, you don't have to know how to build a clock to tell time. And that's the same approach I want you to take to the software. You don't have to, hey, good morning, Thala, know how every indicator is created. You don't have to understand all the intricacies, but I'm going to teach you how to look at it and take that information, and then you're going to study and reinforce those lessons. So on your large chart, you have to have strong trigger lines. And those strong trigger lines are going to provide you the advantage of momentum. On your large chart, termination conditions should be false. Room to the profit area is true. This is going to provide you the advantage of a clear path. And then we're going to use a smaller, faster chart to use a limit order to buy or sell pullbacks at areas inside of favorable large triggers, and it will provide you the advantage of an entry area. So a trade is really three advantages pieced together to create the trade. When you forfeit an advantage, well, then you go into that medium probability realm. So we're going to focus on the high probability, those three simple rules coming together on only two charts, guys. No reason to overthink it in the beginning. Your analysis is going to begin on your biggest chart, your 13.2, your highest time frame, and you're going to use the most current bar, and you're going to be able to determine a couple things. You're going to be able to understand the direction of the market. Is the market going up? Is the market going down? Background color is going to let you know. If the background is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If you're in a downtrend, the background's going to be red, and you're only looking for rules to be met for high probability trend trades short. As this is the first advantage you're going to give yourself, trading with the trend, going with the overall flow of the market, and then we're going to look for the rules to be met. Rules 1 and 2 on the 13.2. You just fixed your wife, cuckoo clock? Rule number 1 says strong triggers, providing you that advantage of momentum. Rule number 2 says no termination conditions, giving you that clear path. The first 2 out of 3 advantages are going to come from that 13.2 because the 13.2 is like a broad stroke of a brush. And what happens on only one bar on that 13.2 is going to be whittled down. On the 5.1, we're going to go to that smaller, faster chart for the third and final rule, where you're going to use a limit order to buy or sell an entry at an area inside of favorable large triggers. Everything that's happening in this one bar comes to be in 15, 20, 30 bars on the 5.1, and it's that refinement process that's going to allow you to reduce your risk and maximize your profit potential. So simplicity in the beginning, guys. 3 rules, 3 very clear advantages. Let's do it on only 2 charts with the understanding that when you create this great foundation for yourself, you are going to put yourself in a position to not only see a lot more in the markets, but also take a lot more in the markets. And then before we get into rules, I want to remind you the path, especially my new users in this room. The step-by-step path to becoming a confident trader ASAP. I'm not even going to focus on the right side of this. Post your trades in class. When you downloaded software, you were given TechSmith Capture. TechSmith Capture is going to allow you to take pictures every day of everything that you see on your charts. Post those in the class and let's have a discussion with it. What do you see? What are you doing? Why are you doing it? And we're going to use this interactive format for you to get feedback 15 hours a week, every week, Monday through Friday, on everything that you do with the software so that you can begin to grow and make sure that you're not only seeing things the way they should be seen, but taking advantage when the advantages are there and really learning to sit on your hands when the advantages are not. The second part of that path is using a spreadsheet. Nexgen, once again, has provided you a spreadsheet that's going to allow you to track everything that you do. I'll pull mine up real quick. Whoops, it's over on the other screen. And this spreadsheet's going to do 2 things for you. Every time you simulate and practice a trade, put it on the first page. Talk about how you felt. If you have any notes, maybe you broke a rule, maybe you followed all the rules and it was successful, put that into your Excel sheet and come back and study it each and every day. If I take 10 trades on Monday, I'm going to study all 10 of them on Tuesday. I'm going to begin to recognize patterns that are making me successful, but I'm also going to begin to recognize patterns that maybe are taking my advantage away. What we do is rules-based each and every day, so every time your rules are met for that high probability trend trade, snap a picture. Make sure that you can go back and study exactly what it should look like. When those 3 advantages come together to give you a trade, you should have hundreds of pictures of that so that you can put those pictures and burn them into your mind. And when it happens in the live market, you find yourself where you're not missing it. So take pictures, simulate lots, post in the class, post in your spreadsheet, and enjoy the ride. Build that solid foundation. And we're going to do it with 2 charts. And we're going to focus on the three advantages right now. And the first advantage really is trading with the trend. So that background is going to paint red or green, and it's going to happen when the small triggers break above the large triggers. Your small triggers are these solid lines, these faster moving averages. When they break above the large triggers, the dash, the slower moving lines, background paints green. That's your cue, only looking for high probability trend trades long, trading with the trend. When those small triggers pull below the large triggers, you can see that the background paints red. You now are in a downtrend, only looking for rules to be met for high probability trend trade short. Guys, this is your first advantage. And it's not important to know how that background is painted, but it sets you up for rule number one. It sets you up for that first advantage. And that first advantage is momentum. And you have advantageous momentum when you have what we call a strong trigger line. In an uptrend, a strong trigger line means that your small triggers are above the large triggers, which will already establish that uptrend. They have broken away from and above your large triggers, created space. There should be a visible gap between the two for your best case scenario. This strong trigger line means that the odds are favorable for the market to continue in the direction of the trend. And you're going to hear me in class all the time. Odds favorable momentum. Did you have that OFM? In a downtrend, small triggers break below and away from the large triggers. Large triggers are wide. They're angled in the direction of the trend. It's the space created between the two that lets me know that the odds are favorable for the market to continue down. That odds favorable momentum is the first advantage in a high probability trade. And honestly, it really becomes the advantage in nearly every trade that you take. Because when the small triggers work their way back inside of the large triggers, this is called a weakening of the large triggers. And when you weaken those large triggers, really anything can happen up or down. The market may go up, the market may go down, the market may reverse. And you go from having that advantage, that great feeling of odds favorable momentum, to that anything can happen. And guys, you'll find that I have pictures everywhere. And it's going to cycle throughout the day. You're going to go from odds favorable to anything can happen. Often there's going to be a market reversal somewhere in there. The closer to the reversal spot, typically the more advantageous the momentum. As it goes and exhausts, here comes your anything can happen, odds favorable momentum. And then moments of indecision. When the small and the large don't agree, the advantage of momentum is not present. And I like this picture because it reminds new users that patience, waiting for the advantage, is always your best option. And when you don't get the agreement, maybe the triggers are down but the trend is up, it's that moment of indecision. It's that market trying to figure out what it wants to do. And this is where new users are tempted to predict what the market's going to do rather than waiting for that advantage of momentum. So rule number one is really pretty simple. It's two trigger lines, right? Strong triggers give us momentum. If you're brand new with me, if you're focusing on consistency, will you give me a why in the room and let me know that you're comfortable with that concept of odds favorable? Because this starts everything. That 13-2 leads the way. Those strong triggers lead the way. And once those trigger lines are present, and it's going to take you maybe 6 minutes to really understand what the look looks like, well, then we're going to give ourselves the advantage of a clear path. And a clear path is using those Fibonacci areas. Hey, good morning, Jay Trucker. Welcome to the room. You know, we've had a couple truckers in here. I'm not sure if you're really a trucker, but we've had quite a few truckers in this room. When we're looking for that clear path, when you're trying to make sure that you're not trading into, oh, awesome. My father-in-law was a trucker. Areas that may reverse the market are as follows. It can be a divergence high. And what divergence means is that when this pivot was made at a high and momentum doesn't follow the market, this magenta line is going to print, and it lets me know that there was a loss of momentum at that area. We're going to look for red Fibonacci resistance, yellow 1-to-1s, blue Fibonacci support, and a divergence low, which is that same concept. As this pivot is made, but divergence or momentum doesn't follow, you'll see that negative number print, you'll see that cyan line, just letting you know that momentum isn't following price. And it becomes a very simple process to determine this clear path, to understand these termination conditions, and it becomes a comparison. A comparison of the trigger lines to the area, and it's a two-part process. And I always encourage new users, write this down, because it's easy to begin to create rules in your mind for what this really is. But it starts with two things. Price reaches an area, and that's the first part. That's what's got to happen. These price bars come down, come in contact, maybe a tick away, but price reaches one of those key Fibonacci areas. And then it's a simple matter of asking yourself, where are the triggers? And guys, you'll find that I simplify a lot. And I don't think that you can oversimplify, because simple is always better. So it's a simple process. Price reaches the area. If my trigger lines remain above support, below resistance, well then I'm at a termination condition. Rule number 2 is not met. I'm at an area that may reverse the market. No more trades from the small chart into those areas. You'll see it at lows. You'll also see it at highs. Price reaches resistance. All of the trigger lines remain below. Because they're below, we're not looking for long trades into the area. This is your safeguard, guys. This is your big red flag saying just sit on your hands for a second. From resistance, price comes all the way back to support, all the way back to these mid bands, and the trigger lines don't get through the area. This is that 90%, right? 90% of what you do during the day is going to be reading your indicators, reading your charts, waiting for advantages. From support, resistance is tested again. And when I say tested again, it means that, well, here it was, and here it is again. Price comes to this Fibonacci resistance area. It also comes to that divergence high that printed. As it reaches it, exceeds it just a little bit, none of your trigger lines are able to follow through, guys. This is what we call a pivot stop out. When the pivot is just a little bit higher, goes through that divergence high, and then begins to trade down, this is a very powerful top. When it happens at Fibonacci resistance, or it happens from below at Fibonacci support, it becomes even more powerful, adds powerful to the top. And guys, we're going to define your best option before a trade as a termination condition that creates a full reversal. That's a lot of words. We're going to knock it down. You have a strong top when a termination creates a full reversal. You have a strong bottom when a termination creates a full reversal. And by full reversal, not just a change in color, but your large triggers go from green and up to red and down from a top. The small triggers get below, provide you that odds favorable momentum, or go in the other direction. Price reaches support because no trigger lines break through. It is, in fact, a termination condition. And once that termination condition creates that full reversal, large triggers go from red to green. Now we have a strong bottom in place. This circle on a tail here on your 13.2 represents one of those refinements on the 5.1, one of those potential high probability trend trade entries. So your high probability trend trade after a termination condition that creates a full reversal is your best chance of success. It's the highest probability trend trade that we teach. And it's where you guys are encouraged for those first 20 trading days. Really focus and make sure that you're not missing this one. It doesn't have to be the only one that you take, but you want it to be the one that you never miss, that you really focus on those rules, that chart reading, because this is your best chance of success, and this is a trade that typically wins 70 to 80% of the time. Is everybody comfortable with identifying a termination condition so far? I'm going to bring up a picture. I've tried to simplify it into just one picture. I call this the is it broken picture. Price reaches resistance on the left side of your picture. No trigger lines break through that area. This is a termination condition. 100%. There is no clear path. Without the advantage of a clear path, the recipe for a trade hasn't been met. On the right side, small and large triggers both get above that area of resistance. That area of resistance begins to act as support. You now have a clear path. Rule number 2 has been met in its entirety. This is the basis for a high probability trend trade. But remember I said that we're going to go from high probability to medium probability, right? This is your first medium probability trade, and this is what we call a 50-50 look. Not a 50-50 trade, but it's a 50-50 look, meaning that 50% of your trigger lines, the small trigger lines, are broken above this area of resistance. They have odds favorable momentum. But the large trigger lines haven't made it through the area yet. So this area has the potential to break with all that momentum, but it's not a clear path. It hasn't broken yet. So 3 looks for the new user. Either the area hasn't broken, absolutely no trades. The area has broken, you have a clear path, look for your rules to be met, or you have one of those 50-50 looks. That potential for a break is going to have you identifying on your smaller, faster chart if that clear path is still advantageous. And that's going to be your last termination condition that I talk about. And this is the one that you're going to see on a 5-1 chart before you see it on a higher time frame. And it's 3 divergences, 3 losses of momentum in the same price range may terminate the trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers, meaning that your small triggers go from odds favorable down to anything can happen. So not only have you lost momentum 3 times in the market, but you've gone from that advantageous trigger look to the one that tells you that it's becoming a bit of a crapshoot. And it becomes more powerful still when that third divergence is higher than the previous from a low, lower than the previous from a high. This is one of those head and shoulders patterns if you're a pattern reader guy. But it simply means that price, not only could it not exceed the previous pivot, but it's also lost momentum. So guys, you're going to see this on your 5-1. And when you do, it's going to help you identify change on the 13-2. You may see those 3 divergences from a low that isn't coming from a termination condition, or from a high that isn't coming from a termination condition. So these are our first 2, right? Strong triggers on the 13-2. We have momentum, strong trigger, or no terminations on the 13-2. That clear path is available for us. Now it's just a matter of you guys refining on the smaller, faster chart that area where the market is most likely to continue. You're going to find your best of the best entry, and you're going to be able to do it with amazing accuracy. When the rules are met on the 13-2, this is your look on the 5-1. And the 5-1 is going to be all up if we're in an uptrend. The 5-1 is going to have strong trigger lines. We're looking for what we call odds or favorable large triggers, meaning that those trigger lines are trending one on top of the other. Those strong triggers, large triggers and synthetic, they're overlapping because this overlapping is going to create the smallest potential version of where the market is likely to continue. And your job right now is making the decision that it is in fact time to take a trade. Advantages 1 and 2 are in place. You're going to focus on the areas that are falling inside of these favorable large triggers. High probability trend trades come from areas, and those areas can be fibs, it can be mid bands, it can be those yellow 1-to-1s. But the key is that they are inside of favorable large triggers. So I'm going to type this all out because it all goes into that rule number 3. Rule number 3 says that I'm going to use a limit order, wait for the market to come to me. I'm going to buy a pullback, a small retracement in price counter the underlying trend, and it's going to be at an area inside of favorable large triggers. So the decision is made, the areas are identified. Your pullback begins with a reversal bar. After all of these up bars, here's your first down bar. This is your cue to find your window of opportunity. And your window of opportunity for a long trade will extend from the highest point of support to the lowest point of support inside of favorable large triggers. So from this mid-band all the way down to one-to-ones. It's the areas inside of favorable large triggers, and my job with all that momentum and nothing in the way on the 13-2 is to right-click and activate a limit order at the top of the window for a long, at the bottom of the window for a short, and then sit on my hands. My job is done. Now it's up to the market to either pull back to that 21 area, and if it does, I'm in a long position with the advantage of momentum, the advantage of a clear path, and the advantage of having entered the market where it's most likely to continue. My initial stop, my protective stop, will go below the large triggers, below those one-to-ones, to the area where the market should not go. If it's most likely to continue from this window, if it goes beyond that window, I no longer want to be in the trade. And guys, I'll take this trade 1,000 out of 1,000 times. Your job is to make sure that you identify and take this trade 1,000 out of 1,000 times. Understand your best of the best entry, because when you take that high probability trend trade, this is your result 70 to 80% of the time typically. Profit targets reached. And because you waited for the pullback, once this reversal bar prints, you've reduced your risk a lot typically below that reversal bar. And because you waited to pull back all the way to areas to give it that bounce point, well, then your profit potential is absolutely maximized. And guys, this is your high probability trend trade. And a couple pictures of those windows of opportunity. Reversal bar prints. Looking for the areas inside of those favorable large triggers and ignoring those areas outside of favorable large triggers. Reversal bar prints, looking for that highest point of support to the lowest point of support inside of favorable large triggers, and not focusing on those areas that have fallen outside of those favorable large triggers. Guys, your limit order is going to go right at the top. And when you piece the two charts together, when you look at the advantages present on the 13-2, that odds favorable, that nothing in the way, if you circle one of those tails, one of those potential entries, you'll see that that circle on your 5-1 chart lines up with an area of support inside of favorable large triggers. And if this is your look, guys, the rules are met. You have a rules-based trade. But you're not waiting for the tail on the 13-2. And a lot of users confuse us. They're like, well, every time I wait for the tail, Mark, that trade is long gone. Absolutely. We are anticipating and understanding where that tail is most likely to happen based on the areas of support inside of favorable large triggers. Things that are going to happen for new users as you're determining. This is a great look, isn't it, Mike? And it gives a lot of confidence in the trade. Some people will tell me, but Mark, there's only a few ticks to the target. I don't want to take a trade so close to a potential termination condition. And I always remind users that you're calculating your distance to the target not from the top of the 13-2 bar, but from that area where you're going to be taking an entry on the 5-1. And it creates an awful lot of room to get to that target. One of the other things, new users will worry that the small triggers turn against them on the 5-1. Remember that it's a refinement chart. It's a smaller, faster chart. Those small triggers may turn against you. And that's okay, because all it's doing is pushing you back to that best of the best area. And then we get into the trust issue. And this is why repetition is so imperative. So often, I'm going to see new users get in high. They're going to watch ticks, and they're going to be afraid, that fear of missing out, that the market's going without them, only to have the market come back and do exactly what the market does. So your first 20 days, guys, your first few weeks of watching the market is all about entries. Everything that you're looking for revolves around getting in at the best spot, because once you learn to get in at the best spot, trades become manageable. So I'm going to give you quite a few gifts right now. If you're brand new to the room, I want you to steal the next three things that I put into the room. The first one is going to be an example trading plan. This is going to be defining your entry point, using the phrase, my trade's the high probability trend trade. In order to get into the trade, I need to have the conditions of this checklist met. And then I want you to start taking pictures of that best entry, not worrying about whether it wins, whether it loses, taking pictures of the best entry, posting it in class, and having a conversation each and every day until this becomes second nature, until this becomes easy. So that's the first thing that I'm going to give you in the room. You can click and drag it to your desktop. You can download it, whichever is most comfortable for you. The next thing I'm going to give you is a copy of that checklist. The same one that you wrote into your plan. Remember, this is only an entry. This is a mechanical, rules-based entry. Print this out, put it on your desktop, and each and every time you're looking for those rules to be met, make sure that you're lining it up, that you're asking yourself these questions, and giving yourself the best chance of success as a brand new user so that you can become a chart reader. And then guys, this is my favorite gift to give you. This is my personal spreadsheet. In my personal spreadsheet, I have pilfered 150-ish pictures from you guys. Entry rules met for not only that high probability trend trade, but also that medium probability 50-50 look. And this is 58 and 58 is 116 plus another 34, 150 pictures of high probability trend trade entries. And guys, I'm giving you these pictures because what I want you to do is study them. I want you to click on each and every picture. If I click on that first one, Luciano's trend trade, you'll notice that the small triggers are below the large triggers. The large triggers are wide and they're angled to the direction of the trend. There's absolutely nothing in the way which lets me know that I can go to my 5-1 chart and look for a potential entry. Luciano waits for the reversal bar, activates a limit order at an area of resistance inside of favorable large triggers, and then my favorite part is he gets paid on this trade. So your goal for the first 30 days is just get comfortable with this look. Take as many pictures as you can, steal my pictures. Every time somebody posts a picture in the class that fits the rules, steal it, put it into your spreadsheet. And then the most important thing you can do is have NinjaTrader 8 open, which I do not apparently. And I thought that I did. Sorry guys, I had a big travel day yesterday and I am running just a little bit sideways. Let me get my NinjaTrader up, and I apologize for the delay. Got in late, woke up early. Ed, I'm living in Oregon for the next couple months, but I was actually down by you this weekend. Had a doctor's appointment in the Woodlands. And then we're not sure where we're going to be next. You guys know that being a day trader provides you the ability to do anything. Oh no. Man, Ed, I was in and out so fast. I flew in Saturday night and I flew out yesterday morning. I have a doctor in the Woodlands that requires a face-to-face once a year. So I went and did that face-to-face. And that's it. Guys, when you get your plan down, when you get consistent, when you're profitable, go make money anywhere in the world. You're not shackled to the farmstead, right? Guys, I've been day trading across the Southwest United States. It offers tons of flexibility. When I moved to Oregon, I fired up my computer in Big Bend National Park. I was at the White Sands in New Mexico. While my charts load, let's look at John's. Let's see what John did. Termination condition created a full reversal, didn't it, guys? Price reaches support, absolutely no trigger lines break through. Let me do this real quick. Can we walk through this together? I don't have a gold chart, so we're going to steal John Novak's picture. Guys, I want you to steal this picture. And I'm going to use my checklist. Remember we talked about having a checklist? And I'm going to cover up his 8-range chart because we don't need this one. This is such a beautiful look. Termination condition creates a full reversal. That is a textbook. Good top or bottom. I'm going to put yes on that same checklist that I gave you guys. Odds favorable momentum, right guys? Small triggers above the large triggers. Large triggers are wide. They're angled in the direction of the trend. We know with no uncertainty that the odds are favorable for the market to continue up. We haven't reached Fibonacci resistance, 1-to-1s, divergence highs. There is no termination condition in place. And guys, look at where the market pulls back. Let's create the window of opportunity from the top of the triggers to the bottom of the triggers. The area where the market is likely to continue will be from the areas inside. And doesn't it come right back to the absolute tick? This just happened in gold. It fits every requirement on the checklist. It's a high probability trend trade. And off it goes to the races, guys. This is your focus for the first 20 days. That's chart reading at its finest. That's advantages aplenty. And what an amazing trade, John Novak. Thank you for sharing that. So what I'm going to do is I'm going to click share, excuse me, and I'm going to upload this to Screencast. And guys, you can do this whether you're on Capture, whether you have Snagit. And I'm going to get the link. I'm going to close out this, and I'm going to pull up my spreadsheet. And I'm going to put a link to this picture because I'm going to study this every morning and make sure that I can do exactly what he just did. And I'm going to mess the whole thing up. Let's try this again. I'm going to put the link in there. I'm going to drop my link to the picture in the address bar. And I'm going to call it JN's Perfect Gold Long. And I'm going to come back and study that each and every day. Is everybody comfortable with what we just saw there? Why is it the perfect trade? Because it comes from a termination condition that creates a full reversal, that provides the advantage of momentum and a clear path, and ultimately gives us a pullback to that area of support inside of favorable large triggers. Guys, this is your trade. So go through the process, write a plan, make it super simple. This is what I'm looking for, this is what it looks like, and then practice each and every day. Post those charts in the room, ask your questions, make sure that you're comfortable, and then the next thing you can do is watch this. I think I just saw one in crude oil, and I bet you guys posted it too. I'm going to scroll back just a little bit, and I'm going to circle this tail on my 13.2. Odds favorable momentum, no termination conditions, and it pulls back and it's a tick or two above that support inside of favorable large triggers. But you're going to begin looking and recognizing these pictures, and you can scroll back on your charts and look for that odds favorable momentum. Look for that clear path, and every time you see those rules met, give it a circle. This one happened about 4:20 in the morning. And let's see what it looked like on a 5-1, guys. Picture perfect, pull back to an area of resistance inside of favorable large triggers. So the second half of your study is circle these pictures, or circle these tails, right? Line it up on your 5-1 and take a picture. If those rules are met, make sure that you get it into your spreadsheet. Make sure that you write the rules on the chart. and write them out as they are. I had strong triggers. I had no terms. That's one of those 50-50 looks. And this is the most important one to write, I think. I had a pullback to an area inside of favorable large triggers. You can shorthand a little bit. But once you have it, click share. Get it to screencast. Open up your spreadsheet. Create that knowledge base through repetition. I'll put the link in once again. And we'll call it a perfect 50-50 short crude oil. And there it is. Now I can come study it again. But I didn't need the live market for this, right? I can scroll back and look for these looks historically. I can practice my rules historically. And that's all it becomes, guys, is repetition. Repetition breeds confidence. Termination condition creates a full reversal. You notice that there's also 3 divergences in the same price range, lining up right with this termination condition. Full reversal creates odds favorable momentum. Odds favorable momentum. Smalls are through the area, the large are not. And as you see, as those large triggers come down, overlap, we begin to recognize areas of resistance that fall within them. Potential setup for a perfect 50-50 trade. Termination condition pushes it all the way back to support in the mid-band. Doesn't this look? Watch this. Let's go to the rule number 2. Termination condition pushes all the way back to the mid-band and support. Termination condition pushes all the way back to the mid-band and support. We're trading patterns, guys, and I love it when this happens because we're trading patterns each and every day. One of the other patterns that I'm recognizing right now is my large trigger lines are still above that reversal bar marker. And this picture is a perfect representation of what we call the gap theory. Because this is how you identify mid-bands behaving as termination conditions. This is how you keep yourself on the right side of things. If price pulls away from those synthetic triggers too fast, too far into an area, Fibonacci mid-bands, price typically snaps back to those triggers. Let me give you a picture of this one. Save it in your spreadsheet. And I love it when the market gives us all these great lessons in the moment. Price accelerates away from those large triggers. The large triggers remain above this reversal bar marker more often than not enough to create this pattern, this repetition look, is price loves to close the gap back to those large triggers. And what that means for you guys isn't, hey, let's go long from support that we hope holds, because look, we're fighting trend, we're fighting momentum. It gives you a little bit of a patience piece. It says, I'm looking for a short from this great termination condition, but I'm going to be a little bit cautious and a little bit patient because price is likely to close that gap. And guys, there it is live right in front of you, which means if you got excited and hopped in down here at this mid-band, it did exactly what patterns tell us it's likely to do. Is everybody comfortable with that? What a great safeguard to keep you from getting run over in this vacuum. And now, from a great termination condition, we're pulling all the way back to those large triggers. It's kind of done. If you have rules for it, Gary, absolutely. But let me show you why I say that. Everyone wants to know, well, if it's going to close the gap mark, can I just go long? If you go long right here, you're fighting the termination condition. You're fighting the momentum. You're fighting the direction, right? You're banking an awful lot that this pattern is going to be truthful. So there's a way to write rules to give you some help with it. but it's not a high probability trade when you fight that much stuff, when you give away that many advantages, right? Ed, I'm about to send you a nickel because one of the easiest ways to lose your money fast is trade against those strong triggers, guys. But if you can say to yourself, with those strong triggers from a termination condition, that's where it's likely to pull back to. Gary, now can't you start looking for opportunities up here, going with the trend, going with the momentum, going with the direction, going with the anticipated outcome? You see how that works? New users want to fight everything and get along because they're afraid of missing out. Experienced users went short just below 96 and probably just took 6 or 7 points right here. Trading with the direction. Every chart agrees. Trading with the momentum. Does that make sense, Gary? It is tradable. But the consistent trader, John, I love it when you do exactly what I just talked about. It's an HVA trade. It's a trend trade look on the 5-1. And it has everything agreeing. Nice trade. So Gary, there's your picture. You notice that he doesn't have an entry at support. Waited for the advantages. Trading with the momentum. Trading with everything in place. John, great trade. So guys, that's our first hour. And this is what we talk about in the first hour. We talk about foundations. We're talking about advantages. We're talking about putting yourself in a position that when you get into a trade, everything agrees, right? All charts agree. From this foundation, you're gonna find a myriad of trades. And the second half of what we do in this classroom, especially for my new users, and how are my new users doing? Jay the Trucker, how you doing? I know I've got a lot of new people in here today. If you are brand new, raise your hand. Let me know. Ask a question. This is not a one-sided lecture. This is designed to be a 3-hour conversation. And the more you post in the room, the more you're going to get back out of this room. The more questions you ask, the more pictures you post, the more charts that you annotate, the easier it's going to become to read your charts, and the sooner you're going to get to that place where you told us that you wanted to be. So keep asking, right? Guys, we're still looking at that termination condition creating the full reversal. We still have odds favorable momentum. In the event of a reversal bar, wouldn't it be easy? Even right now, before a reversal bar even happens, I'd have to have Chart Trader on. Isn't it easy? This is what we call a pre-trade picture. Pre-trade picture, right? Odds favorable, 50-50. There's my potential entry. I'm not in the market, but this is a picture that I can go back and study and make sure that I'm following my rules. John, there's a question for Paul. He's asking, why are you okay trading into that Fibonacci area of support that absolutely no trigger lines broke through? Paul, since I have the microphone, I'll answer for him. Because there were termination conditions, and let's go through the process. Perfect termination condition on the 13.2. And I had a question the other day where somebody asked me, well, John talked about termination conditions on the 5.1. I thought we looked on the 13.2. Things that he's looking for. If the 13.2 leads the way with this great termination condition, and then on your 5.1 at that same area of resistance, absolutely no trigger lines break through the area, that is compounding and kind of really reinforcing that great termination condition. And then John will take it even further. When he gets a pivot stop out outside of an outer band and the smalls are below the large, it's just adding fuel to it. So, Paul, it becomes a matter of using your chart reading to determine advantages and then being able to take a look at your charts and saying to yourself, there are so many advantages in place that this really is a perfect trade based on the patterns that I recognize, the strength from the top, the momentum of the triggers, and being able to identify where the first trouble spot lies. Does that make sense? And John says, take the money on the first short. So he just traded back through, right? He traded back into that area of resistance with the momentum from the great top. And guys, these are the things that if you start, thanks, McCarty. If you start basic, right? If you start with, I have the advantage of momentum, and then you begin to piece it together through chart reading, the basics take you to the next step. The next step is going to introduce you to things that you won't even realize that you're recognizing, right? You'll begin to recognize that gap theory without having to go through it in your head and saying, well, price reached the area, the large triggers are a full bar away. Because of this, there's a gap theory that says that price is likely to snap back to the large triggers. You're just going to go, oh, too far away, hold on. And then you're going to go, that's too far away, hold on. Well, maybe I should look for an entry up here because of these other conditions that I'm recognizing through my chart reading. Does that make sense? Because, guys, this is the path that you're on, and it's a very exciting path. Start simple. Allow it to be simple. I had a conversation, and then I'm going to take a break. I was in the Woodlands over the weekend, and I was sitting down with a buddy of mine who was asking about this. And I invited him to the Discord, and he came in, and he sat in on one of my classes. And I asked him, I said, well, what did you think? And he said, Mark, it terrified me, which I thought was kind of interesting. And I thought, well, I don't think it's that terrifying, but I do this every day. And what he told me is he goes, there's so many moving parts. He goes that I couldn't figure out which ones were important and which ones weren't. And I said, you know what? That's very valid. And that's very much what the new user does, is they try to make sense of everything. They try to assign a weight and a desire of everything to everything. Everything has to have a reason. When the reality is, and we sat at a table at a restaurant, and I actually opened up a chart. I said, the reality is if you can create an awareness of momentum through strong triggers, and you can create the awareness of a clear path through the simple process of have the triggers broken it or have they not, and if you study that entry area, within 15 to 30 days, the average person will be able to execute this almost flawlessly. And what this does, this high probability trend trade does, is it gives you the opportunity to have a trade in your arsenal that makes money consistently while you grow with the software. To give you a trade that wins more than it loses while you learn the software, the termination condition, creating the full reversal, providing the odds favorable momentum, simply waiting, right? Waiting for a reversal bar to identify the potential pullback. Let's change the color of this. At the area, inside of favorable large triggers, giving me the advantages in place of a trade that typically wins 70 to 80% of the time. Keeping it simple, keeping it focused, letting the advantages be present. And what happens is when you really start nailing this trade and you become confident, well, then this trade works its way into your trading plan, right? That high volume area trade works its way into your trading plan. And then John talking about that momentum style trade. So he's showing you, and I love this, he's showing you the progression. The first trade is the highest probability trend trade. The second trade is probably going to be that momentum style when the areas break, when the momentum is the absolute best. And then that's going to work you into being able to take advantage of those tops and bottoms, knowing where it's likely to retest to get you to the next area. Guys, so far there's been 2 trades in this one move. And those 2 trades have gone from, we'll say, 95. The market's already at 83. That's 12 points on the S&P. And there were opportunities to double dip in there. to make a little extra money. So that's what you're going to do for your first 30 days. Focus on the basics, learn to recognize the advantages, and from those advantages, guys, your ability to recognize, to take, to execute, to manage trades is going to grow exponentially. Is everybody comfortable with that? I hope so, because this is your path. And I'm going to be with you every step of the day, every step of the way, every day, Monday through Friday. 3 hours providing feedback, which we're going to do when we come back into the market. You guys have been posting an awful lot of pictures. I'm going to scroll to the top of the chat room. I'm going to start clicking on your pictures, and we're going to do a lot of talk about it. Gary, you want to hear something cool? Don't take them. If you're not comfortable with the trade, guys, don't take it. Simulate it. Take pictures of it. But if there's something that you're not comfortable with, let's say you're not comfortable with odds favorable momentum. Mark, for whatever reason, I can't wrap my head around odds favorable momentum. Well, I'm going to tell you, go back and just scroll and look for opportunities of odds favorable momentum. Take pictures of it and use that repetition to create confidence, right? Termination conditions. Take a look at termination conditions. See what the market does after. Termination conditions. See what the market does after. You're going to create an awareness and a comfort level through repetition. So Gary, go back and take 100 pictures of momentum trades. Do it without the live market, without the pressure of profit, without the pressure of loss, and get comfortable with the look. Guys, I'm going to take a few minutes. I'm going to go refill my water. When I come back, we're going to get into all of your pictures. We're going to take a look at what you're doing. If you have questions about any chart that I look at, please feel free to ask a question about it. If I missed your chart for some reason, please repost it. If I missed your question, please repost it, because when I come back and I go through these guys, I have to scroll like this to get back and forth through the pictures. So every now and then my human element comes out a little bit and I miss something, but don't let me. Make sure you come back. Make sure you remind me. And guys, I'll be back in just a minute and we will get into that second hour. All right, y'all, let's get into that second hour. John, what did you say? Amen. No reason to take anything you're not 100% comfortable with. There is one guarantee. Your rules will be true sooner than later. Just wait. And that's so true. Then the second half of that is that a 4-point winner is never a bad winner on the ES. However, if they're making his 4 points look anemic, he's okay with that. The first ES trade of the day, there will be more. Telling myself this so I don't stew on what I didn't get. Focus up on what he did get. That's some great reflection there, John Novak. And guys, if you're looking at the S&P right now, you'll notice that there's a loss of momentum, right? Anything can happen triggers. There's a loss of momentum on the 5-1, weak triggers, divergence. The ES is giving you indications that things are potentially slowing down, right? And if things are potentially slowing down, doesn't it make sense that the retracement may go higher? Using that basic concept of momentum to read your indicators and give you some indications. All right, I'm going to scroll up to the top. We're going to take a look. Ed, you got us going. Ed says, everything says down with momentum, takes a momentum style, gets in, gets out. Some people would say that's an amazing trade, Ed. One more. Why do you have market flow on your 13-2? And Ed, this is one of those trades. Ron C's proud of you right now. Everything says down. Everything has momentum. There's absolutely nothing in the way. Going back to those concepts, right? Those concepts of momentum, of a clear path, and just finding an opportunity to get in, to get out, to make money. And then John talking about a perfect all-chart termination condition. And guys, this is what we were talking about earlier. When we're talking about termination conditions, and Mary, I'm not sure if you're in this classroom today. I hope that you are. Setting up termination conditions, terminations leading to the best of the best, right? On your 13-2 chart, it's one of those pivot stop outs. On the 5-1 chart, no trigger lines breaking through the area. You'll see pivot stop outs. You'll see these key areas. When you start getting the same look that says, hey, this trend may be terminating, and you start getting it on every chart, guys, it becomes very, very powerful. Make sure that you're paying attention. And then Ed, everything says up and you go short. Everything says up and you go short. Everything says up and you go short. I hope this one worked out for you. I really, really do. Taking advantage of termination conditions, right? Trigger line location. Maybe just a little premature, but I hope that one worked all the way down to the profit targets for you. Gary, let's see what you did. Gary says termination, odds favorable. Everything says up. It pulls back to the area of support inside of favorable large triggers and just doesn't get them. Sometimes that's frustrating, but guys, that's a part of it. We are not in control, right? And then Ed, using that great termination condition, smalls on the correct side, divergence on the market flow, you get in, take smart profits at the first trouble spot, you have absolutely no risk on that trade. Nice job. And then Carl, there's that same long, right? Everything says up from a termination. There's that beautiful pullback right to support inside of favorable large triggers. And you're able to make money on the way up. Guys, this is a great looking trade. Clear path, odds favorable. This would be one of those trades that I would encourage you to steal. Grab Carl's link. Take that picture. And make sure that you're so comfortable with that look that you can come back and do it, just like Carl did each and every day. And then Gary, same thing. Could have been in here. 3 divergences, say things may be changing, right, as we pull into that termination condition, but still an opportunity. Odds favorable. Everything's cleared. right? No termination at all. Only 2 losses of momentum, pulls back to support inside of favorable large triggers. This is a 100% rules-based, great-looking entry. Nice job. And then Ed, nice job. Everything says down, right? Might as well get paid. And just setting up, waiting for that next one. Termination. Large above the reversal bar. Gary taking that great lesson, right? If price, if reaches an area, if those large triggers are above the reversal bar, Gary pinpointed exactly where that market's likely to pull back to. And it is at support, absolutely. At support, at support, at support, at support. That's where chart reading, that's where you have to resort to your rules, right? What do my rules say about trading into a termination condition? If I'm a brand new user, my rules say don't do it. It's financial suicide. If I've been studying my software for a couple months, my brain begins to recognize the advantages and it begins to weigh out. It does a little comparison. I have 10 things to say that this market is likely to continue down. I have one thing. I'm willing to forfeit the advantage of a clear path when I have so many other factors that suggest that this clear path is going to break. Does that make sense, guys? That's all we're seeing here. And Gary's showing us a great example of chart reading, reading the indicators when there's nothing to do, and beginning to weigh out those advantages and disadvantages. And now, Ed, you had your termination, you had your odds favorable, you had a pullback, and that one should have gotten filled, right? Just about. I hope you caught it. A little bit greedy. Couple ticks below that area inside of favorable large triggers, especially when it lines up with an HVA, Ed. It's a good looking setup. Bobby? Bobby says, I'll go play on gold while you guys are on the S&P. Termination, odds favorable. Look at that. Picture perfect. Area inside of favorable large triggers. And making money. Closed out at $300, Bobby. Are you mad about it? I hope not. Because that's a picture perfect trade, which means I want that trade in my spreadsheet. I want to be able to come and study what Bobby did so that I can do it. Nicely done. And then Gary, termination. Thank you, Bobby, for posting that. Ed, entries hit, termination, everything says down, everything says down, everything says down, and we know what happened with that one. We watched it happen. Gary? Not trading into termination conditions. Good job sticking to your rules, right? Joel? There's that S&P. Terminations, everything says down. Joel, you making the decision not to trade into support? I respect that decision, right? Identifying the gap. Gap's closing right up here. Great job. Guys, when you take pictures of things that aren't trades, you're reinforcing your ability to read charts. And then, Joel, there's your gap theory, right? Pulled right back to the large triggers, right back to resistance. And Gary, not necessarily an edge trade. It's just a trend trade. Termination, odds favorable, pull back to the area of resistance inside of favorable large triggers. It was supported by a high volume area line. It really is just a trend trade without rule 2 being met. But the advantages stacked up, saying if nothing else, you can trade back to that potential trouble spot. If you have rules for it, Joel, if your rules say don't trade into a blue line that no trigger lines broke through, then no, you didn't have rules met. But if you didn't get into this trade, guys, let me show you how powerful pictures can become for you guys. Termination condition creating a full reversal is an advantage. Odds favorable momentum is an advantage, right? All my triggers rolled is an advantage. Area for entry inside of favorable large triggers is an advantage. No divergence is an advantage. Strong triggers is an advantage. All my trigger lines roll with odds favorable momentum is an advantage. Having that high volume area right at that stacked area of resistance is an advantage. And that market flow signal, once again, becomes an advantage. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9 reasons that this market should continue down. And I have a 5-1 area of support that says, be aware, right? You've identified your potential trouble spot. Medium probability trades will have you entering when a small issue exists and managing assertively. That management means that this 81.16 area is a great profit target. Does that make sense? So Joel, I love it if you don't take a trade. Gary, if you don't take a trade. Bobby Thala, everybody, if you don't take a trade, take a picture and talk about what was going on in the trade and the advantages. And this is how you grow as a trader. Is this right here. Is taking the information when you're not in a trade, when you're not emotional, when you don't have an attachment to what's happening, and really analyzing. This is what it's telling me. These were the advantages present. Because your brain in the beginning is going to have you looking at what's wrong and not looking at what's right. David, good morning. Let's see what you did. David's a big fan of that momentum style trade, right? Everything says down, get in, get out. Get in, get out, get in, get out. What will it do here? I have no idea. Isn't that the best answer ever? What will it do there? I have no idea. But 3 divergences in the same location with weak triggers gives me an idea of what may happen, right, David? Weak triggers on the 13.2, multiple divergences, weak triggers. Gosh, chart reading. Chart reading gives you information. And David, the only thing that I might say on these, and I like the way you're doing it, you're like, I'm taking money every chunk. Eventually, you'll probably take more contracts and less trades and just grab that whole gap when it's this strong down to the trade. Beautiful trading, though, David. Great job taking that plan and making it yours. Taking those advantages, creating a trade you're comfortable with based on it. All right. And then, who was this? Alan? Sorry, I keep saying Alvin. Alan, are you with me? Were you in the room for all those talks? Whole number, Mike? Yeah. Were you in the room for all those talks about the gap theory? And guys, this is exactly how that gap theory works, right? Being willing to be a little bit patient. Let it close that gap back up to the large triggers, especially when they're so far away. And then Alan, here's your picture, that little patience piece. Just hold off till it gets to the triggers. More often than not, guys, It's going to keep you safe. And then the other side of that is if you do want to make sure that you're in, if you do want to make sure, you have to be willing to put that stop on the other side where the market shouldn't go. Hope that made sense. And then Joel, whoo, tiny little writing. Let me get my old eyes focused. We had a termination that created a full reversal, and you said you got in because of a good top. Joel jumping in the middle without momentum. I like that you didn't lose any money. You waited for confirmation on the 8 range. So Joel, the only thing that I might say, especially because I know that you're looking for consistency, because you've posted enough. Joel, your area inside of favorable large triggers, and it's barely even inside of favorable large triggers, is all the way up here. That's the closest area on this pullback, which means that if you got a market flow signal here, the rules weren't meant for a trade, right? And if the rules aren't meant for a trade, then let's go to market flow. That's all right. You're not in trouble. But the trade rules have to be true, because what you're doing in this trade, let me clear some of these out just to make sure I'm not using so many resources. So what's happening in this trade, Joel, and let's take everything back to advantages, right? I don't have the advantage of momentum. Excuse me. I've given up the advantage of momentum at least once here. I don't have the advantage of the entry. So what you're doing is you're kind of working on that hope a little bit. Rule number 1 isn't met. Rule number 3 isn't met. And you're hoping that market flow from space gives you a winner. And I think your management was really well done. So the flip side of that is great job recognizing change and not hoping for a home run. I think you managed it perfectly, even if a couple advantages aren't there on the entry. And then John, anything can happen triggers. Reversal bar from support, divergence, losing it. You take the entry at the higher point because of the divergence. You take a portion off at the trouble spot. And if it makes a higher divergence, you're not willing to give it back. Reasons for entry, reasons for exit. That's all it is, guys. It's just a plan. Reasons for entry, reasons for exit. You're welcome, Joel. Carl, odds favorable, no termination. You get in a couple ticks above support inside of favorable large triggers, and you get paid right up there. Beautiful trade, Carl. Nice rules-based trade. Thala. Let's make this a little bigger so my tired eyes can jump in. Remember when I said great entries make manageable trades, right? Awesome, Joel. I think that repetition of going back helps. So Thala, I'm going to use yours as just a little bit of help for the whole class here. Your entry, right, was at 79 at the area of support inside of favorable large triggers. Is everybody comfortable with that? And Thala, I love this look. Odds favorable, no termination conditions. Yeah, so the difference is really 9 ticks. And because you got in 9 ticks, when that third divergence prints, telling you that little trend may be over, you had no real way to manage it. Your risk is huge, right? And after 3 divergences, you jump in again when the 5-1 is telling you no, and you're able to salvage a little bit. But the cool thing is is if you're in at 89, or I'm sorry, at 79 right here at 80, there's $100 profit at 90. There's a break-even trade, and there's no reason to re-enter after 3 divergences and weak triggers, especially if you're using that 21 coming directly into that divergence high. Does that make sense, Thala? And that just kind of goes back to great entries, getting in at the best of the best area. It really creates an advantage for you. It really creates a manageable trade. Paul, welcome back. I hope you had a great trip. Nice to see you in here. Weak triggers, losses of momentum, getting in just below the mid band outside of favorable large triggers, quick profits, and you're out. Yeah, that happens sometimes, Thala. Paul took a shot, managed it well. I think he lost a tick on it, right? He knew that there was challenges. 21 was strong down. Right on. Is that your picture? Is that your proof that the 21 was strong down? Or is that just a different one? All right. And Thala, you say, please use the question from above. Let me see what your question from above was. When price is moving away from small triggers, I say when price is moving away from large triggers, is it sufficient if it touches one of the large triggers or both? Is it good enough if it touches this? So Thala, I think this is a great question, and I'm going to answer it with a rule. And I'm going to simplify that. Area inside of triggers, right? So right here, it's your mid band, right? Right there at those large triggers. There's no areas up here. Right here, it's resistance and a mid band inside of those large triggers. Ideally, they're one on top of the other, right? So Thala, what happens is when they split a little bit, it can create a larger window of opportunity. And then I really like to go back to definitions. Well, what's a window of opportunity? A window of opportunity, whoops, wrong one. A window of opportunity, I'm sorry, Safia, I'll get it, is from the highest point of support to the lowest point of support inside of the favorable large triggers. So the tighter the triggers are, the smaller the window. Does that make sense? But we're still always looking for areas inside. Cool. That answer the question? So these are your only areas, right? Well, let me take a picture of your picture. And the first part is that these large triggers aren't a full bar away. But if I look at from the top of those synthetics to the bottom, that's a huge gap, isn't it? But these are the only areas inside. So that's your window of opportunity. Does that make sense, Thala? Cool. But your stop's still going outside of the large. From the mid band to the fib. That's your window right there. And it looks like it nailed it, right? Good job. Great job. Safia, I apologize. Odds favorable, clear the path. You hop in at 88. What got you into the trade? You use the fib right there, quick little momentum style. Little stab back. I like it, momentum style. I love everything about it. Everything says up, right? Everything has momentum. The area is cleared, pulled right back to it. It's more of a momentum style trade though, isn't it? Because you never got a reversal bar. You never had an opportunity to create a window of opportunity. This is the market exceeding and snapping right back to it. Beautiful trade, Safia. Beautiful trade. Every advantage. Everything's up. Everything has momentum. Everything's up. Odds favorable momentum. You clear the trouble spot. You get in, momentum out. Safia, I'm not sure that you could have done that one any better. Nice job. All right, Paul. Man, you guys are hitting me with pictures. I appreciate it. Let's see what you said. Gap theory in progress. And that was that crude oil. Same look as the S&P, wasn't it? One of the big differences here, though, is, Paul, you've got a slew of termination conditions on the 13-2, right? It's not just a little 5-1 area. You've got 21 support, 1-to-1s. You've got a mid-band with a large, yeah. And then you don't have any areas up here at the triggers either. Be curious to see what happened on that one. I'm going to scroll over. It did fill the gap. Did it continue up off of the gap? Let me go to the crude oil. Let's look and see. Look at that. No areas, right? And it pulled right back up to that fib. Nothing to bounce off of. That's all those areas are inside of favorable large triggers, are areas to bounce. Yeah, there's nothing to stop it, right? Except a couple red lines. And now we've got a pivot stop out at resistance. But guys, what do your trigger lines say? And this is a great example of how rules keep you on the right side of things. You don't have odds favorable to the downside, so we're not looking for the short there, right? You're kind of in that holding pattern. You're waiting for everything to agree. And once everything agrees, it's going to become easy. But when you've got this indecision, right, it becomes a little more difficult. Anything can happen. Losses of momentum, but you do have areas inside of favorable large triggers. You've given away the advantage of momentum. You've given it away twice on the 5-1. The other side of the coin is that you're pulling into an area that's likely to stop the market based on trigger line location. But you've had, if we pull the 8 range in, you've had a reversal bar with divergence. You've had a high volume area print. You're creating challenges for short trades. It doesn't mean that it won't go down. It just means that if you make the choice to take this trade, you're able to identify areas that may become problematic. And that's all we're doing. Each and every day, we're determining advantages, we're determining disadvantages, and we're asking ourselves, is there enough in favor of the trade? Is there enough happening right now? Are my rules met to take a trade? And experienced users back me on this a little bit. If you allow it to be so simple that it's either rules met or rules not met, it takes a lot of pressure off of you, doesn't it? Doesn't that take the pressure of I hope it goes down off of you? Doesn't that take the pressure of I'm not sure if this is the right trade off of you? And I think that's one of the key points for new users. Take that pressure off of you. You're learning to read your charts. You either have odds favorable momentum or you don't for 30 days. You either have a clear path or you don't for 30 days. You either have an area for entry inside of favorable large triggers or you don't for 30 days. From that 30 days, you may start saying, well, everything says down. All of my triggers are below the area. This is an area likely to stop the market. Because of two divergences, it's probably going to take out this pivot right here. If I get a market flow signal from this area that takes out this pivot that are inside of favorable large triggers with a clear path, I'm willing to forfeit that loss of momentum. And then when market flow doesn't give you that signal, it keeps you out of the trade. Guys, this is adding that next level, adding that third chart, that confirmation chart. Pretty cool, right? It's just chart reading, if then. If this happens, then I'll do this. If this doesn't happen, well, then I'm going to do nothing. And we got an amen from Mike W. I love a good amen every now and then. Because the reality is every one of us have forfeited these advantages and lost the trade. And the people that grow from it, go back and take the picture, guys. And trust me on this one. The people that are not doomed to repeat history are the ones that learn from it, that just take this simple picture and do loss of momentum, right? And they come over this way and they say 2 losses of momentum. Not mom. I hope you didn't lose your mom. And then they say outside of favorable large triggers. And they're just going through and dissecting. Or if they took this short, they're using this as a management opportunity, a second higher divergence, small triggers inside. And they're saying to themselves, man, I took a perfect entry at 70.86 or 70.05, whatever that is, 70. And it came all the way down to 67.25. I took a little money right here. But because of the conditions, the losses, the momentum, I got myself to break even. And guys, this is a perfect opportunity for a $100 trade. Don't expect home runs if they're not throwing you home run pitches, right? Does everyone see and understand what happened there? 13.2, lost momentum. 5.1, lost momentum. The areas began to fall outside of favorable large triggers. You begin giving away those advantages. Or if you took the first shot, you had an opportunity to manage out. Focusing on the process, focusing on the rules. The advantages on this one, they're slim, Paul. The only advantage on this one is that every trigger line is below 70, meaning that this is an area that may stop the market when price comes back to it. That's the only advantage that I see in this one. Do you want to go through the disadvantages again? Loss of momentum, 2 losses of momentum, right? And then what happens? Higher pivot, weak triggers. So the advantage of momentum is 100% gone. And then if you are incorporating an 8-range chart, you had a reversal bar from support with divergence outside of the outer band. You had a breakout bar that created a high volume area where the buyers got together and said, guess what? We're going to fight you tooth and nail right here. By the time it came up here again, your smalls had already turned against you. Your smalls are strong against you, and your smalls had turned against you inside of here. Guys, this trade, especially the second entrance, is that I sure hope it goes down. Not my indicators say it's going down, but I sure hope it's going down. Does that make sense? And now that termination condition, it's holding, isn't it? And that first quick one is a pattern that you will see a million times, Paul. And with one loss of one loss of momentum and that clear path and that area inside, getting in at 69.75 creates a very manageable trade. Creates a great opportunity to manage assertively. It's not a high probability trade. I love this trade with everything below the areas. When it lines up this well, I'll typically give it a shot, but I'm not giving it a shot with market flow because that confirmation costs me entirely too much money to be able to manage that trade properly. Pretty cool. How was golfing? Hope you had a good time. Nice. Very nice. So guys, what do we see right now? The S&P has odds favorable momentum to the upside, but the S&P is directly into resistance and absolutely no trigger lines have broken through. And my large triggers are all the way down here at the reversal bar. Should we see if the gap theory comes into play again? Let's draw a little box on that gap theory. And because this pivot, here's our next chart reading lesson, because this pivot isn't coming from a key Fibonacci area, one of the patterns, that's right, it's a bad bottom. It's not a strong bottom. One of the patterns that we'll recognize is they'll come up with that loss of momentum, retest resistance, retest the midband, maybe even the higher one. That gap theory says, well, it's likely to come down a little bit. Very often, guys, it'll smash right through those large triggers and go to that next area. When your pivot isn't a termination condition, it's not from a key area, the market loves to continue to that next key Fibonacci area. So we'll see if it happens. Here we have gap theory in place, right? So we know that we're not going long in between these areas and the large triggers. And let's just see if they decide to come back and reach that area of support. This is a pattern that you'll begin to recognize over and over and over. And let me blow this up. Here's price coming from a pivot beyond the areas, pulls all the way back to support, gap theory in place, and the market continues to the next key area. Here's a pivot from beyond the area, pulls all the way back to midband, resistance, gap theory in place, continues the move to Fibonacci support. Guys, isn't it amazing? Pivot from beyond the area, all the way back to resistance, large triggers don't flinch, down to the next key area. Beyond the area, all the way back to resistance, consolidation, finishes the move. Give me a Y in the room if you're with me on this, guys. These are patterns that you'll begin to recognize. Termination condition, pivot from nowhere, back to support, back up to that next key termination condition. Guys, Nexgen users, congratulations. You have the software that the big investors, you're looking at the same key areas that the people that move the market are looking at. And you have a set of rules that's been proven to win more than it loses to keep you on the right side of things. And Miel, I agree 100%. The software is amazing, but it's just a treadmill, right? My crystal ball, I don't have a crystal ball, Paul. Alan, it's really very simple. If a Fibonacci area is reached, price accelerates away from these large triggers, and they remain a full bar away. Price is likely to snap back and close that gap. And let me show you the picture that we took earlier on the S&P. And it's not necessarily a trade. All it is I'm not looking for a short trade until that gap is filled. I'm not looking to even consider longs until that gap is filled. It's not a trade setup. Yeah, it's just a, hey, let's stay safe, right? Paul, show me a picture. What does your crystal ball say? Filled by the price bar. Yes, sir. Mine says that a pivot stop out at resistance with everything rolling and strong triggers. This market has a great shot at going down from a termination condition this strong. But it also says there is no harm in letting 80.62 break. If 80.62 breaks with odds favorable momentum, I would be surprised to not see a retest of 79.91 using Fibonacci to determine. But Paul, can't you see? Isn't this range bound? So I play if then. Resistance held, support held, resistance held, support has the potential to hold. How many of you get chopped up in these areas? Saying to yourself, but everything's set up, but everything's set down, but everything's set up. Congratulations once again, guys. You have Nexgen. You can say without hesitation, these are the areas that have held. I'm going to let them break before I risk my kids' college tuition. And when the market has been range-bound like this, you're probably going to end up with one of those 50-50 trades first, right? You're going to end up with one of those ones where the smalls break through and the large don't. You don't have to be first. All right, Thala. Everything above, price reverses. You're 50-50 right there on that 1-to-1. But look at your entry. Your entry's down by the mid-band, right? And it closed the gap back to the large triggers. Your stop was in the right spot, and you got out at the trouble spot. If you're going to take this trade, Thala, you took it beautifully. But what does your 21 say? 21 says, don't do it. Even your 13-2 says termination. But you did it perfectly. You let your charts agree on the 13-2 and the 5-1. You got in at the area, and you said, I'm not going to hope. I'm going to get paid, and I'm getting out at the trouble area. At 22-2, and look, there's those large triggers. It closed the gap to the large triggers on your 21. Nice execution, Thala. So there's that range bound. Support held again, guys. So Paul, what did my crystal ball say? My crystal ball. Why is it doing that? My crystal ball said it's okay to let those areas that have been holding break. That's all it says. When resistance holds twice and support holds twice, let it break. I love a clear path, guys. Pivot from space, up to resistance, close the gap to the triggers. Did you didn't take a trade in there though, did you? Not yet? They always do. John said that earlier, and I'll tell you what, he was right. If you're patient, eventually, that's all right. Eventually, the market's going to do everything that it said it was going to do. So far, we've got it going, right? Resistance to hold, gap to be filled. Alan, do you see it? Just keeps you. And now we're going to see if the second half comes true. It closes the gap and it bounces right back up, right? Now your smalls are turning, your large are turning. Not saying that there's a trade to be had here, but because of patterns, because of repetition, because of the pictures I take and the questions I ask and the time that I spend, I don't know, Paul. I'm sorry, I don't know the answer to that one. I run one without synthetics. When I'm trading and I'm using 7 and 8, I run the 5-1 without any synthetics on it at all. I look at a 5-1 on an NT7 chart. I don't know. I believe it's just, I don't know. 2023 Nexgen Rinko, Nexgen 5-1 Rinko 2023. If I'm not mistaken, and I may be because I am fallible. This one right here, 5-1 Nexgen Dynamic Rinko 2023. So we're in that indecisive stage. Guys, remember earlier in the day and we were talking about that odds favorable momentum? And I said there's a point where the market is transitioning and there's no agreement, and this is where people are tempted to predict what the market will do rather than wait for the rule. Does everybody remember this picture? Aren't we there right now? The hardest thing about being a day trader, guys, is doing nothing when there's nothing to do. The market does not present statistical advantages every second of every day. Your job is to be patient. Your job is to believe in your path, to believe in your rules, to believe in your advantages so wholeheartedly that you're willing to wait for those advantages to materialize. Mike W., there's one of your amen moments. Because that is the hardest part of being a day trader. It's not the rules, guys. The rules are simple. There's only 3 of them. The looks are simple. You either have odds favorable momentum or you don't. So if I have new people in the room, do we have odds favorable momentum currently on the 5-1 chart? What do you think, guys? You don't even have to be new. And if you're not sure, if you're like, you know what, he's asking me and I just don't know, guys, your job is to ask. Your job is to say, Mark, I'm not sure. Can you clarify? In which I will lovingly reply, when the background is green and the smaller green and the larger green and they're wide and angled in the direction of the trend, and there's a gap between the two, well, then I have odds favorable momentum. And right now, my smalls are red and flat. My large are red and flat. My background is green. The only thing I have here is a short that loses, and then a long that loses, and then a short that loses, and then a long that loses, because I'm not giving myself the advantage of momentum. This market may go up 1,000 points from here, but until it has odds favorable momentum, until it has a clear path, I'm sitting on my hands and I'm waiting for those advantages to be present. And on that note, I'm going to leave you guys with the S&P, and we'll see if it does what patterns typically do. We'll see if it dances in this range for a minute. And you guys get to play the amazing game of if-then. If I get odds favorable and a clear path, and it provides me an area inside of favorable large triggers, well, then I'll take a trade. But until that happens, I'm going to go throw an Eggo waffle in the toaster. I'm going to refill my coffee. I'm going to text my wife and tell her she's pretty. I'm going to do anything other than giving away my hard-earned money to a market that isn't providing me advantages. I'll be back in just a few minutes, guys. The last hour of classroom, I'm going to say 2 things here. The first thing is, if you're sitting on the sidelines right now and you're out there and you're like, man, this guy, there's a lot of information. I'm going to show you the picture. Day 1, day 2. It's a lot of information. It's a lot to process on the first day, right? You're drinking from a fire hose. It's coming at you full tilt boogie, and you're like, man, that's a lot. So this is where I implore you. Keep it simple. Don't worry about everything. Worry about the most important things. Worry about the momentum, and just get good at recognizing it. Worry about termination conditions, and then just get good recognizing it. And then when you can identify odds favorable and no termination conditions on this chart, focus on that best entry, that rules-based entry, that checklist-based entry, and allow it to be simple. And don't worry about anything that doesn't fit your rules. Guys, I'll be back in just a few minutes. If you have a trade, post it. Make sure you annotate your chart and write your rules. If you have a question, please post it. Guys, if you're brand new with me here in Nexgen, raise your hand, say hello. Take a picture of your screen. Let me know what you see. I want to hear from my new users. I want to hear from my demos. I want to hear from you guys that maybe you're sitting on the sidelines a little shy to post. Because if you get in the habit on day one of just posting, you're going to get to where you want to be a lot quicker. I'll be back in a few, guys. Hour so far. S&P is telling us to be patient, right? And John, let's see what you did. Looks like a gold trade going on here. John says termination pushes all the way back to mid-band and support, just like in the manual. Comes back up, retests resistance, triggers don't follow. Doesn't have that odds favorable momentum, but he's going through those advantages again, right? If this top is really going to be a top, trigger lines will roll. Looking for the pullback to the triggers. Not a high probability trend trade, but certainly an awful lot of chart reading going on there, creating advantages. Hey, what do you guys notice on the S&P right now? Trigger lines don't agree with the trend, right? Multiple divergences in the same spot on both sides. Once again, we can use Fibonacci. We can use trigger lines to determine this area that we really want to see the market break out of. No rules are met, therefore no trades are taken. Creates an opportunity to keep you on the sidelines waiting for advantages. Termination to resistance, the market consolidates, pulls right up to that furthest point of resistance, guys. If 81.19 decides to break to the upside, if I have odds favorable momentum, well, then I have an opportunity. And the S&P is still going sideways. Guys, sometimes it's difficult for me to find live market examples when the market consolidates a little bit. But the live market example right now is that sometimes the market consolidates. Sometimes it takes a minute. Sometimes there's this fight between buyers and sellers. There's absolutely no reason for you to get run over. There's no reason for you to try to predict. You have a set of rules that have been proven to win more than they lose. And guys, using the theory of who's in control, your large chart's going to set the tone. Your 13-2. That odds favorable momentum, that clear path, that's the large chart mentality. That's the large crowd opinions. All these fluctuations, all of this scattered up and down, that's the small crowd. These are the small fish in the big pond trying to make something happen when these guys aren't ready for it to happen. That's exactly what we're witnessing on the 5-1. The small chart's doing their best. They're trying to create an advantage, but the large chart just hasn't given it yet, right? So we're in a patience piece. Eventually, all of these charts are going to agree. They're all going to be facing the same direction. The momentum will be there. And then you'll be good. What do you guys want to talk about? Do you want to talk about momentum? Do you want to talk about entries? Do you want to talk about termination conditions? Whoops. Want to draw stuff on your chart that you didn't mean to draw? I feel like I might need to open up a gold chart. We'll just take a look. Still caught, right? Just waiting. And Shogun, that is the greatest thing you can do, right? Well, there are two different trades, Safia. There's a momentum trade, and there is a trend trade, right? Trend trades rely on momentum and pullbacks and areas. I believe the trade that you're talking about, let's just go to Discord. And let's go to the trading rules. And we could look at the momentum trade rules. And this is where everything starts, right? When it's time to learn a new trade. When you're like the high probability trend trade, got it, nailed it, I could do it. I'm ready to add something else into the mix. And you say, I'm going to let it be the momentum trade. Two things have to happen. The first thing is you have to have rules. And I think that this is one of the most important things, because if you don't have rules, you can't write a plan. And if you don't have a plan written, well, then you don't have a plan. How are you going to know what to do? How can you create if-then? So momentum trade rules. The strong trigger lines on the 13.2 must be true, right? You've got to have odds favorable momentum, because you can't have a momentum trade without momentum. And very often I'll see people take these anything can happen triggers and they'll say, well, this is a momentum trade. Well, you lost the first one. Know where your trouble spots are. So Safia, I'm going to scroll up to your picture. So we'll use yours to talk about it, right? Know where your trouble spots are. You knew that 89 was a trouble spot, potentially, right? But the small triggers are starting to break above it. So you knew that this line in the sand could be problematic. So what you've done here, and I think that this is the key for this style trade, and I'm assuming that this is the style trade that you're talking about, and we'll use it on 3 charts. The first thing that has to be true is every chart has to be advantageous. And you're comfortable with that, right? The second thing that has to be true is you got to know where your problems are. So there's your problems. So the idea behind this trade is on your 5-1, with that momentum, you clear the problem, and then you come back and tap it, right? And that's really all it is you're saying everything says up, everything is fast, everything is clearing the area, and I'm going to let it break on the 5-1, and if it comes back and taps that support, I'm going to enter the market. Momentum's going to get me into the market, and you did a great job. Momentum's going to get me out. And these are trades that aren't typically home runs. These are trades that you're going to get in, you're going to get out, you're going to make that quick money, you're going to manage them assertively, right? So you really took a great shot at it right here. Make sure the small one trigger strength, location, relative to the 13.2 small triggers. Enter on a pullback at the fibs, mid-bands, 1-to-1s, below the 13.2 triggers. So it's that little pop-up, just getting in. That's the sound it makes. Pop-up. And know your management spots before entry. So if there is trouble in the way, Safia, this isn't a hold and hope trade. This is an in and out trade. So when I'm learning a new trade, and when anybody's learning a trade, so know the rules, right? So Safia, go back and take pictures of the rules being met. Make sure that you're comfortable with exactly what it looks like. And then the next step, and I think this is hugely advantageous, make a checklist. Make a checklist for that momentum trade rather than relying on a checklist for a trend trade to do the exact same thing. Because they're different trades. They have different rules. And then you're nailing the trend trade. Practice this one the same way you practice the trend trade, right? Practice these entries. Go back and use market flow. Go back and use market replay. Start that process of taking pictures of these the exact same way I know you took pictures of all those trend trades. And what you're doing is you're going from, hey, this is new, and then you're taking it to, hey, I'm pretty comfortable with what I'm looking at, right? And there's that great trade. Momentum coming from a termination. There's that quick little stab back. It breaks, stabs back with all that momentum, and then continues in the direction of the trend. So go find 20 pictures that look just like this, Safia, and what you're doing is you're just creating confidence. I think the momentum trade is a pretty easy trade. It just takes, just like anything else, it just takes a little repetition so that you see it in the moment, because momentum is fast, right? So you've got to be comfortable if you're going to get into a fast trade. I don't know. Let's look at the rules. Strong 13-2 triggers on the large chart must be true. There you go. Rule number 2, no termination conditions. This sounds familiar, doesn't it? Strong triggers, no termination conditions. What's the only difference? The only difference is that you're taking that no loss of momentum, everything fast, break the area, quick little pop. So having areas is key. This is your first shot coming off that top. And then I would encourage you 100%. I know that people like, well, I'm working on another trade, but it's not a high probability trend trade. I don't want to post all those in the classroom because, I don't want to take time. Take the time. Looking for the pullback on the 5-1. So let's look just for grins. So Safia, termination creates strong triggers coming off that termination. Tons of momentum. Right here at 95 would be that first momentum style entry. Nope, you're looking for a pullback on the 5-1. Smaller, faster chart keeps it manageable. The momentum is established. The area clears. Quick little snapback. Termination conditions must be false. That's why you're not taking it off this midband. And let's see what it looked like back here. Termination condition way down here, gap theory in place, Safia. Look how it breaks with those strong triggers, pulls right back to the area, and then continues in the direction as that momentum grows. So all you're doing is you're looking for that clear path. But you're looking for that clear path with a big push of momentum behind it. And when it gets to the other side of that clear path, you're just saying, all right, it broke it, it's strong, it's fast. If that small crowd mentality gives me a tiny little push back to that area with all that momentum, I'm going to get in. I'm going to get in with momentum. I'm going to get out with momentum, or with a loss of momentum. And that's really what that trade is. Guys, there's your termination condition, right? Oh, crude oil. Went range bound. The buyers were able to get it just to that backstop above. And now the fight begins again. No trigger lines break through the area. If you went long at 81.06, you have probably been separated from your money. Safia, you're very welcome. Thank you for asking the questions. This is your class too. Guys, those of you that are worried about taking up class time, the whole idea is that you take up as much class time as you can. Joel, 50-50, right? And Joel, you're not running synthetics, it looks like. You're missing an 8120 fib. But it's a 50-50. Resistance hasn't broken yet. Pivot stop out hasn't broken yet. And especially on, have you guys seen this before? The market goes range bound and you get one of those 50-50 trades to one side or the other and it gets stopped in its tracks. And then it rockets the other way. Establishing that clear path is such an important part of what we do, guys. Gary, this is the S&P. Small above the large, everything's flat, divergences everywhere. Not a thing to do. John, termination, triggers roll, high volume area trade. Guys, this is just a high volume area trade. Small stop as you come into the trouble area. If you get more down bars, you'll keep going. Guys, this is not a high probability trend trade, and I can't stress that enough. He doesn't have odds favorable momentum, but he does have a termination condition that's created that reversal, right? All of his trigger lines have rolled on a smaller charts. He's trading from those areas. There's a lot of reasons for this trade, but it's not a high probability trend trade. Guys, you're going to get to this point. And I have a picture that kind of helps define or helps understand what it is he's looking at. And it's might versus has. And when I do this, I want you to look at the timing of his entry. Notice that his entry isn't over here. No entries here. Waits for everything to roll. Might versus has. This area of resistance might hold, but everything still says up. This area of resistance has held. All of my trigger lines have broken. What you do between here and here is going to have a huge impact on your success as a trader. I think resistance will hold. Well, it doesn't. You get run over 4 times. Resistance has held. All my trigger lines roll, smalls below the large. And guys, the coolest phenomenon ever is that this price where it's held is almost always exactly the same price or in that same range as where you're hoping that it'll hold. And John's picture is a great example. I think it's going to hold. It's held. It's almost the same price right there at 21. I think this is going to hold, but let me wait for everything to agree, and now it's held. That patience piece is going to pay dividends. Now we have a termination condition, right? Now we're getting that trigger lines. Everything's looking to agree again. Smalls aren't below the large yet. Guys, we're getting into this if-then scenario, right? If this is really going to be a top, all my trigger lines are going to roll. If then. There's that S&P still messing around, right? Can we identify the area that needs to break for shorts or the area that needs to break to start thinking about longs? Paul. Waiting for everything to roll all the way down for a trend trade. What's the translation? Waiting for my rules to be met. Eventually, you may learn to buck the system a little bit, right? You may find an earlier entry. You may use a pattern. But right now, just waiting for the rules to be met. Guys, I'm going to mute my microphone for a minute because I'm starting to ramble. And this is the point where John Novak sends me a message that goes, hey, just shh. Let them direct the class. So guys, it's on you. I'm going to mic silence for a minute. If you have a question, if you want to talk about something, if you want to post a picture, do it. Otherwise, let's just see who wins this fight in the S&P. Man. Guys, this is what we call the go fix a sandwich pattern, right? Don't have to be first. Two types of people in the market, guys. Here it comes, shark picture. Two types of people. Sharks and remoras. And I know that this is going to hurt your ego a little bit. But ladies and gentlemen, you are remoras. You're not creating the movement in the market. You're not creating tops and bottoms, momentum. That's what those deep pockets are doing for us. But you have a set of rules that allows you to see the areas that they're going to react to. You have a set of rules that allows you to identify the momentum that they create, the clear paths, and then you can jump in when everything lines up and take your little piece of the puzzle there, that little bit. To the mid-band, nothing rolls. Look what happens. Looks like they're resuming the trend off of the good bottom, right? Small's breaking above the large. The large are all above the area. If I'm not mistaken, it just pulled back to support inside of favorable large triggers. Not the best momentum look. It's all right to let it clear. It's all right to wait for those rules to be met 100% to give you the advantages. That's a termination on your chart. Just waiting. And look at that. Man, everybody was starting to think short, weren't they? My small chart said down. My small chart said. Very damaging phrase. My small chart said. Guys, let the large charts lead the way. Let the 13-2 give you the advantages that you want. And when they do, jump on it. All right. Here's my time killer. I'm going to put this one in the room, guys. I would encourage you to download this, to look at it, to read it, to go through the pictures. Because this is your path. This was something that John and I came up. It was Sunday morning. We're hanging out, drinking our coffee on different sides of the United States. Thanks to the miracle of the internet, we're having a real-time conversation looking at charts with one another. And we're talking about the path to success, the path to getting comfortable. How can we make it easiest for you guys? What's the path of least resistance? Well, to minimize your learning curve, post your pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. And I see this so often. Simulator millionaire, the second you go live, all that luck runs out. How will you know the difference? Well, you need us. You need feedback. I'm here to help 15 hours every week live. My email works. My Skype works. Get that feedback. If you place a trade on Simulator, if you participate in class, there's no risk of loss or capital. What an amazing way to learn something, right? It's like learning to skydive in one of those air tubes or learning to scuba dive in a pool. It's that safety net for you. You need someone to tell you what you did right or wrong when you're new. And this really is the educational magic that we offer, guys. 15 hours every week. I'm giving feedback on everything that you do. John Novak, the writer, the software, the CEO, is jumping in and out of this classroom and not just sharing pictures of what he does, but sharing pictures of patterns that he recognizes that are going to make you a better trader. They're going to make you a better chart reader. Use this outline for education. I'm going to follow the links in here. Post your pictures, use the spreadsheet. Guys, you're going to learn the trigger lines for when it's okay to trade. That's what this classroom is. That's your first hour every day. Learning the rules, learning the looks, and then I just need you simulating every day. If you're afraid to lose fake money, you're going to be terrified with real money, right? So get in there and simulate. Get used to going through the process, focusing on the process, not the results. Don't practice the wrong trades. You may not know they're the wrong trades if you don't post them in class. Simplify. Focus on one thing and get good at it before you add the next. And then learn the rules so they become easy. Use market replay. Fix your mistakes. Retrade the day. Take pictures of everything. Repeat this process until you always take the correct trades. Use that checklist. Every time you take a trade, make sure that it's mechanical, that your checklist has been followed. Make sure that your rules are met each and every time. Come on, Google Chrome. Try it again. There we go. We'll do this one. Use that checklist each and every time. Make sure that you're annotating your charts. When you post them in the room, make sure that you're telling me what it is that you see. What are you looking at? Are the rules met? Do you have odds favorable? Do you have no termination conditions? Did you miss a rules-based trade, Gary? That happens sometimes. How did you feel when you did it? Creating that database of rules, using the spreadsheet, guys. Every day, filling out that spreadsheet so you know exactly what you're looking at. Defining your entry, defining your management, keeping it mechanical initially. And guys, give yourself 30 to 90 days to practice a mechanical checklist-based entry, $100, $200 automated exit. And then as you grow with the software, as your experience grows, so will your plan. What are the quickest paths to success? Now, correct me if I'm wrong, guys. Didn't we talk about this one? Who was patient and patient and patient and then skipped this one when it happened? As I don't call trades in this classroom, I talk about the rules that I see. I talk about those smalls breaking above. I talk about that clear path, and I talk about that area inside of favorable large triggers. But ultimately, it's up to you on whether or not that trade is taken. No divergence, strong triggers, tiny window of opportunity, clear path, trigger lines accelerating away. Could we make a case for this trade? Could we present this in a court of law and sell it as a high probability trend trade? Whoops, I lost my checklist. So let's type it out. Will you guys give me a Y or an N in the room? Did we have odds favorable momentum? Were the small accelerating away from? All right, I'm talking now. Sorry, guys. Holy shnikes, I've been rambling for a while, too. You guys could have told me this an hour ago. Just kidding. So what I was saying is with all the patience that you guys had waiting for that range to break, waiting for your rules to be true, did you catch this one or did you skip it? Because John is the only person in this room that said bingo on the trend trade. Yeah, you were on a break. So let's go through this. Did we have smalls breaking above the larger wide angle to the direction of the trend? That separation isn't there yet, but in order to create that separation, we need an acceleration, right? So if you skipped it because you didn't think the momentum was in the way, or you didn't think the momentum was there, then your lesson is that this is the beginning of odds favorable momentum. That's what it looks like when trigger lines accelerate away. You had a clear path. Every trigger line was above, right? You had no divergence on the 5-1. And if you create your window of opportunity from the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support, Can we make a rules-based case for taking this trade? What do you think, guys? If I were the judge, and the reason I ask is because after that little range, after the consolidation, guys, your job is to be so comfortable with this look that no matter what happens before this trade, no matter what you feel, no matter what you wish, no matter what you want, you can simply say, this was a rules-based trade, and because it's a rules-based trade, I have an obligation to my trading plan to take this trade. And that's really all it is. It's either rules met or rules not met. I love everything about this trade. And I was hoping to see a lot of you taking this trade. Joel, perfect. Great patience. Little rule breaker down here, cost you some money. Notice that you didn't post that one. But then you got it back together and you took the perfect trade. Nice job, Joel. And then Paul, you had a fib in the way. You didn't delete your cash and tick. Good lesson there, right? And it went right to resistance, right? And then it gave us a 50-50. Smalls are through, large are not, loss of momentum. If you're playing on the 8 range, divergence and a big antenna bar. Some of you missed this one and tried to take this one, right? Without the advantage of a clear path, with losses of momentum. That's okay, Joel. I saw it. We're good. And Paul, isn't this the dag nabbit? I missed this one, so I'm going to take that one and hope trade. We've all done it. I've done it. I'm not afraid to admit that. The man, I missed the perfect one, so I'm going to take the one where I don't have a clear path. I'm going to take the one where I have a loss of momentum. And then Paul, if you're using that 8 range, it kind of verified what everything else was saying. Starting to get some agreement, aren't we? How long did that take? It was about 10:40 when we were talking about it. Things are at least starting to agree a little bit here, aren't they? We've got a divergence low. Got the small triggers trying to break, but they really haven't, which means technically it's a termination condition. Which means that this, look, potentially has challenges, but as it pulls back to resistance, there are those among us that will say with everything pointing down, they'll consider. Some people will say, I want a market flow signal. But ultimately, aren't we directly into a termination condition? A divergence low, the small triggers have been unable to break, forfeiting the path, the clear path. How amazing to have rules keeping you on the right side of everything. How amazing to have a basic foundational approach to trading that allows you to recognize momentum, that allows you to recognize a clear path, and it allows you to recognize areas for entry. And then as you grow with the software, you'll begin to recognize more and more entries. You'll begin to recognize more and more advantages. But it all starts with a very basic approach. Momentum, a clear path, and an entry create a trade. We gave away a clear path on this one, and it kept us safe. Right? We gave away a clear path and some momentum, and it did exactly what we may expect it to do. The rules are there, the looks are there, the education is there. Now it's just repetition, guys. Rinse and repeat. Rinse and repeat. Do this every day. Simulate every day. Post your trades every day, and let's get you where you want to be. And remember, we're talking about things that win 70 to 80% of the time, which means that mathematically, 20 to 30%, you're going to have challenges. And this, I believe, is probably one of the favorite things I've ever heard, because it's so true about being a day trader. When you stop expecting to win every trade, you really start winning most of your trades. When you stop caring about the result, but only the execution of the method, you're focusing on the process. You're not approaching every golf hole saying, I'm going to get a birdie. What you're doing is you're saying, I'm going to keep my left arm straight. I'm going to do whatever it is, whatever it takes to get a great golf swing. And I'm going to see if I can get that great golf swing to get me a birdie. John Novak. Price reaches support. Smalls have just made it through. Larger up, but the smaller down. No areas inside of favorable large triggers. Can't pass the test for a high probability trend trade, can it? But it may focus, it may work on a chart reading trade. Momentum. Every chart agrees. It's a little different approach, guys, but it's all based in chart reading. I think I have a gold chart. Probably going to take a minute to load the tick replay. It's been a while. Are there any questions? New users, brand new people? You guys that have joined for the first time, maybe you're in your second week. Maybe you're focusing on those great rules, great advantages. So far, so good. Letting yourself be new. Recognizing advantages. It's a 50-50 trade, right? 50-50 at support, no divergence, perfect entry. Identifying the first trouble spot, managing medium probability trades assertive. Could have done this one on two charts, right? If you were in at 21.5, you made it all the way down to 20.02. Your first trouble spot is that area with the potential to break but hasn't broken. There's your divergence. Smalls are still outside. They waffle a little bit. I guarantee the gentleman that posted this trade knows exactly what he's going to do. If this happens, then that's what I'll do. If this divergence prints, I may reconsider. Resistance to hold. Got a few minutes left, guys. That's your gold, right? Most indicators agree with the trade, however, a small issue exists. When taking this type of trade, you must manage assertively. A portion of profits may be taken at your trouble spot. Stop may be moved to break even or reduce risk. Let's see if this divergence takes out this pivot. Happens a lot. It's a pattern. There you go. And now this would be an opportunity, if you're using a market flow chart, to say to yourself, well, now this divergence on a 50-50 has taken out the previous pivot. It's still a termination condition that created a full reversal with odds favorable momentum. If I get a signal, perhaps I'll look to take a continuation style trend trade going south, because my small triggers are still outside of my large. My large triggers are still down. Everything still says down from a termination condition. We're just letting the sharks react to this key area. And I've identified my small issue, and I've identified the advantages. And it's all about advantages. John, I would be curious to see how you manage that trade. Larger up, smaller down, background's red, support is held, resistance is held, triggers are flat, smaller strong, this is green, holy smokes. I can't find advantages. S&P still hasn't broken through that termination condition, nor has it broken through this termination condition. I'm struggling to find advantages. Guys, any questions? Last thing posted was 10 minutes ago, and that was Paul just giggling. I think we may call it a few minutes early today. Let's see, Safia. I don't know. What happened before before that? Did you try to type in the room but accidentally type on your chart? Because I've done that before. And that may be what it was. Have you ever tried to type in the room, but you start typing and it does one of these over here? Sometimes that's a thing. It crashed and you brought it back. I'm not sure, Safia. I've never seen that one. I know that that's not really helpful. Jason would probably be able to give you an idea of what that means. Yeah, you could also try posting that in the traders chat. Good idea, Paul. Because there's probably 100 people over there that have seen this message. I want to be a tech guy. I'm not. Okay. Well, while it's reloading, go post it in traders chat. See what they say. You might be able to make me a little smarter today. I'd appreciate that. And so far, it's still doing what the indicator suggested, right? Yeah, we can. It isn't ever too late to learn something new. Sometimes it takes me a little longer these days, I think, but there's always. I'm a big simplicity. I was in Houston over the weekend, and this was pretty cool. For those of you that didn't know, my career prior to Nexgen, My career prior to Nexgen was in the restaurant industry. I was a general manager for a very popular Tex-Mex restaurant in Houston and Austin. Um, and my forte was training new managers, was creating curriculum for employees, for sales, and stuff like that. And I went into one of those restaurants with my parents because I liked the food very much. And this kid comes up and he's our waiter and he's using all the techniques that I taught 5, 7, 10 years ago. All the techniques that I created, and it was pretty awesome. And I had the manager come up. He recognized me. We're old friends, and he goes, "Man," he goes, "I still use everything that you taught back when you worked for this restaurant because it's so simple. They can't not do well with it." And it was kind of cool. But that's always been my approach. Is what I'm getting at here. Is simplicity is key. Simplicity. The easier you allow it to be, the easier it is to absorb it. Don't give yourself lots to look at. Give yourself the important stuff to look at. All right, there's my story. I like telling stories every now and then. And on that note, guys, I'm going to call it a day. Termination for the win, right? Once again, only one trade today. So, Safia, congratulations. Guys, this wasn't, if you're a high probability trend trader, you're very welcome, Joel. You're welcome, Alan. If you're a high probability trend trader, guys, you were probably bored silly, right? So here's what you do. When we're done with this classroom, go download a day from last week where the market was moving great and just retrade it. Practice. Get those repetitions. Safia, go back and do market replay and look for those momentum trades, right? Or even scroll back and look for some of those momentum trades. Take some pictures and bring them to me in class tomorrow and we'll talk about them. Mike, every morning's a good morning. I do not subscribe to the bad day theory. Sometimes we have a bad 5 minutes. Most people want to milk that for the duration of the day. Every day is a good day. Guys, I'll be back tomorrow morning at 9 a.m. We're going to do it again and again and again and again until each and every one of you in this room is so comfortable that you fire me, but you send me 3 of your friends. That's the thing. If you're going to leave me, I want 3 of your friends. And we'll teach them to trade, and then you guys can go buy an island together. It always gets better, Joel. But Joel, focus on your rules, right? Strict adherence to the things that create advantages until you're winning and making money, and then start to branch out. Opinions will get you every time. I'm Exhibit A. Guys, take care. I will see you in the morning. Excited to come back tomorrow to do it again. If you need anything, my emails work. Don't be afraid to do it, to send me an email, ask a question. I will respond as quickly as I'm able. And then if you have a question after market, feel free to just sit on it. Post it in the room when we get here tomorrow. The questions you ask don't have to be from today. They can be from the materials. They can be from the market yesterday, from your market replay. They can be from a video that you watched. They can be from a conversation that you had with a friend that says that I'm completely full of beans. You should make them explain this. And I'm totally cool with each and every one of those. So go study, practice, write out your checklist, and I'll see you guys in the morning. Take care, everybody. Be good.